All right. Hey everybody, thank you so much for tuning into Young Money Investments. My name is Bennion, and today we have a little, I don't want to say like tutorial, but I guess today's going to be essentially kind of a lesson on what some of the terms are as far as investment terminology goes. So I was going to make a video a while back. I've gotten several comments and everything from everybody online kind of asking about, you know, what do some of these things mean? They've probably opened up TD Ameritrade's Thinkorswim app and they have our program and everything like that. I've gotten a lot of questions about what an RSI indicator is, what is support, what is resistance, what is the MACD indicator, what's a short, what is a long, what is a swing trade, what is, I'm telling you, there's a lot of terms, and it's a lot like Spanish. So that's kind of why I wanted to get into this video today and kind of go over a few terms with you. I really would love to say that my editing skills are going to be super great and I'm going to pop up a whole bunch of stuff. But the reality is it has just been crazy lately. If there are specific things that you have more questions about, or you think that a second video would be better where I would go more in depth about each of these things, leave a comment below. That way I know. A lot of these videos are tailored to what you guys need. That's the purpose of these videos and everything. So I want you guys to be able to go, hey Cameron, I've had a lot of questions about X, Y, and Z. Can you maybe do a video for me? Can you maybe help me out? And I go, yeah, sure, I'd love to make a video on that for you. That's my purpose in doing this channel. Like I said before, it's not for profit, it's not for gain. There's plenty of other things I can do with my time. This is to simply give back and teach a lot of you the ways that I am doing so well in the stock market lately. So let's get to it, let's jump into it and get going. So I've kind of compiled a list here on my smartphone. Now this again is not a perfect list. There are hundreds if not thousands of terms that we could probably go over, but I want to focus on some of the main ones that I use in my videos and maybe things that you've had questions about. So the first term that we're going to talk about is float. Now float is a term that is used to talk about the volume or number of shares that a company has out in the market. Float is going to be the actively traded shares. So a company, for example, let's say has 1 million shares that are outstanding. A share is a piece of a company. If you don't know what a share is a piece of a company, a very small sliver of the pie that you end up purchasing and saying that you own a millionth or whatever it is of a specific company. So you own a very small piece of a company when you own a share of a company or a stock. A stock and share, those are kind of synonymous and kind of interchangeable as well. So float, like I was saying, float is going to be the number of shares that are essentially able to be traded, because there are going to be shares that in a company that are owned by the CEOs, the board executives, the higher ups and everything, as well as employees, that aren't able to be traded on a daily basis. So let's say a company does have 1 million shares, which would be very small. Apple, for example, has billions of shares. If a company had 1 million shares in float, that would mean that all 1 million of those shares could be traded within a day's time. Whereas some companies may have 600,000 shares in float, but they have 1 million total shares. So about 60% of those shares would be traded. If a company has low float, it means that those stocks can change prices very drastically, right? Because if you were to buy up, let's say 50,000 shares of that 600,000 that are out in the market that are being traded, you can fluctuate and adjust the price. Your buying and selling of those shares can change the share price. And so if you are day trading and sometimes you want to trade low float stocks because it has the potential, if things go good, to shoot up. If they go bad, then you have the chance to lose a lot of money, and that's kind of the risk that you take with lower cap stocks. And that brings me to the second term, which is going to be cap. Cap is the capacity, essentially, of the company. How many shares are out there? I want to kind of get through these fast because I know you guys like fast videos. So if I go too fast, let me know as well in the comment section, but I don't want to go too slow either. So the volume. Volume, again, is going to be the total number of shares that a company might have. Like I said, you may have a float of 600,000 shares, like our previous example, but you may have a volume of 1 million shares that are out there of a specific company. So when we talk about volume, that's what we're going to talk about. A share, we already mentioned what that is. The ask price and the bid price. So these are going to be two different terms. I'm trying to think if I'm flip-flopping these. But the ask price is the price that a company is asking. For example, let's say a company is let's say the market makers, for example, the market maker deems that they are wanting $10 per share, right? That is their asking price. The bid price is usually below that price though. So most people, let's say, are only willing, there's a bunch of buyers that are willing to buy a share at $9.50, right? So there's about a 50-cent gap. So what will happen is someone can essentially choose to pay $10 because that's per share, because that's the asking price, or they have the opportunity then to put in their bid, which is at $9.50, and if no one is buying shares at $10, the market makers will drop that price down to those buyers that are at that $9.50 price point or whatever it may be. So that's going to be your ask, and that's also going to be your bid as well. So another term that I use a ton is support and resistance. Support and resistance. Support and resistance. If you guys don't know support and resistance yet, you probably haven't watched many of my videos, because I have already done a couple videos on what those are and kind of why they're important. Support is going to be an arbitrary line that I will draw on the chart patterns and things like that. If you want to learn about support and resistance, please watch my videos that are on TD Ameritrade's Thinkorswim, where I have my laptop and everything. I have this, I'm mirroring the screen and everything and screencasting so you can see my support and resistance lines. Support is going to be an arbitrary line that you see based on the chart patterns where the stock consistently bounces, where no one wants to sell their shares for anywhere below that. And so it kind of creates a support line. Resistance is also going to be a ceiling then, and that is going to be a price that a lot of people have a problem paying more for that stock than what that ceiling price is. Again, ceilings or resistance, can be broken, and then once it breaks through resistance, old resistance becomes new support levels. And so that support or that resistance line that used to be where the stock could not break through is now going to become a floor or support for that stock as it continues its uptrend pattern. Now you can also have support and resistance for descending stocks as well, but that is essentially what your support and resistance lines are going to be. A lot of people ask me what technical analysis is. Technical analysis is the style of trading that I like to use. So, like I said, if you watch the videos where I've explained how to use TD Ameritrade's Thinkorswim app, technical analysis simply means that you are using chart patterns as well as other technical indicators like an RSI or a MACD in order to analyze a company's performance in the market, and based on those chart patterns and things like that, you will actually then end up buying those stocks based on that chart and that analysis that you've made. I love technical analysis because patterns are what make this world go round, especially in the stock market. If you're wanting to buy and sell in shorter periods of time and you're not wanting to go long on a lot of these positions, technical analysis is how you're going to make your best judgment and best decision in when to buy and when to sell a specific stock. So if you've seen recently on my Instagram, I'm up well over $20,000 in the past week here. I made about $15,000 in Tesla. I've made another $5,000 in Nvidia. I've crushed it, and that was because, again, I read support, I knew where resistance was, and I knew what the RSI indicator was indicating. So that's going to be technical analysis for you. PE is another term, so P/E. PE is going to be another term that you'll hear quite often if you're looking more into the fundamentals of trading. Fundamental trading is long-term holding of a company. So when people talk about fundamental trading, they're talking about buying and holding a company, usually for a year to 3 years or 5 years or more. So that's going to be fundamental or long-term trading. PE is a acronym for profits to earnings ratio. Usually you want to buy a company, if you're going long term on a company, somewhere in the range of about, I would say 10 to 20 is usually a fair PE. Now, Nvidia, for example, I think probably is at a 50 or a 60 PE. Amazon is even higher, probably over 80 for a PE. So profits to earnings, so it's trading at 80 times the earnings reports of that company. And so those are astronomical. And as far as a fundamental aspect, you usually would not want to buy those companies. But for example, I am in Amazon, and I'm also in Nvidia. Well, I take that back. I sold out of my Nvidia shares today, but I will continue to buy and sell Nvidia because I believe in them in the long term. But basically for all intents and purposes, for long-term trading, You don't want to buy a company when it's overbought, and usually a high PE is an indicator of a company being overbought. A lot of times you'll hear me talk about blue chip stocks or large cap. So blue chip or large cap stocks, these are kind of synonymous again as well. A blue chip company or a large cap company is a name brand company or a very well known large company. Companies like Apple, Facebook, Amazon, Netflix. I'm trying to think of some other ones that are large caps. Multi-billion-dollar companies essentially are what we're going to talk about when we're talking about blue chip stocks. Nvidia, it's a multi-billion-dollar company now. I would call them a blue chip stock. They have grown tremendously, exponentially almost over the past few years. I'm just kind of mentioning stocks that I've kind of recently traded, so sorry I'm bringing up specific ones over and over again. Tesla would be another blue chip stock as well because it's valued at it's like hundreds of billions of dollars. So anyway, that's what's going to be large cap or blue chip stock. Next we're going to talk about, and I don't really know if I want to cover this, I was going to talk about what a double top is in a chart pattern. Honestly and truly, I don't use that, and I don't really look at some of those chart patterns very much, talking about I don't really talk about what a triangle is or a squeeze. I don't talk about bull flags. I don't talk about bear flags when it dips down. I don't usually mention any of those things. Those are things that we could talk about in another video, so again, leave a comment if you wanted to learn more about some of those other words and kind of things that you're like, what the heck is Cameron talking about? We're going to talk about what an EMA line is. I have that turquoise line on my Thinkorswim platform. The EMA line stands for exponential moving average. It's an algorithm based on the exponential moving function of the chart pattern. If that wasn't a mouthful or a lot to hear, I don't know what is. But the EMA line I use as a conformational line. EMA, again, exponential moving average. I use that essentially to validate that it is a good trade to get into if I'm playing conservatively. But yeah, that's going to be your EMA. You're probably wondering what what VWAP is. I use VWAP, and that's going to be my golden dashed line on my Thinkorswim platform. That is going to be mostly used during day trades. So VWAP, VWAP stands for volume weighted moving, volume weighted average potential? I honestly actually forget. VWAP is going to be a great line. I usually tend to think of it this way. If it is trending above your VWAP, it is a good buy, especially if it's just breaking above it. Anytime your position that you're in dips below the VWAP, it's time to sell. Because it is probably going to dip down and everything at that point for a little bit more. So VWAP is very great, is very useful if you're doing day trades. I don't use VWAP as much for swing trades. I use more of the EMA line, the SMA line, which is simple moving average. It's not going to be an exponential function like the EMA is. And my EMA is that turquoise line. The green line is going to be my SMA if you check out any of my other videos and everything as well. Golden line is the VWAP, golden VWAP. If you put VWAP on your charts, you're going to get a top VWAP, a bottom VWAP, and a middle VWAP. I don't use the top VWAP or the bottom VWAP, I use the middle VWAP. And you can actually, in Thinkorswim, take off the top and bottom because for me it's pointless. I don't ever use it. We were going to go over a little bit about what Bollinger Bands are, stochastic lines. I honestly don't think we need to go over those because I don't even use those. When I first started trading, I thought all of the technical indicators in the world were better. I would use a ton of those. And what I've realized is I don't need those. Like I said, I'm only going to talk about the things that I personally use in order to make my trades and do my plays in the market. So I'm not going to mention those. If you want to learn about those, like I said, stochastic lines and Bollinger Bands, those are other technical indicators that some traders will use in order to make a trade. Bear market. This is a very common term that you're going to hear a lot. We're in a bear market, we're in a bear market, we're in a bear market, or we're in a bull market. Buy, 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 buy. Two different animals. Bull is going to be good. If we're in a bull market, that means stocks are going up, things are good, everyone's happy. If we are in a bear market, that means we're probably in a correction or we're in a recession, a depression. That's a bad time. You do not want to be in a bear market if you are trying to go long on positions. If you're shorting positions or buying put options in a company, you are going to like the bear market. And we're going to go over those as well right here as well. So that's the difference between bull and bear. Shorting a company. This is something that you probably hear me mention a little bit more. Rhett Van Leeuwen is a great shorter. He shorts companies all the time. What that means is, for example, in this example, you are going to buy, company A has shares priced at $10. Now you believe that company A is only worth maybe $6 a share. So it has about 40% to drop, and that's where you think it's going to go. What you do is you go up to friend A and you say, hey, I would like to borrow, you have one share of company A. I would like to borrow your share from you, and in exchange I will give you a percent to hold your share for you. If I can borrow it, I'll give you maybe 5%, so you pay interest on it. The guy goes, great, here's my share. What you do then is you end up turning around and you sell that share right there for $10. You sell it out and you've taken the profits from that. Well, what you do then is you wait and you hold on, and as that stock goes down, it's at $9, it's at $8, it's at $7, it's at $6 now. It's at $6. What you would do then is you would buy that share back. You would turn around to your friend that loaned you the share, and you'd say, hey, here's your share back, thank you very much, here's your 5% interest or whatever you want to pay him. If it's 5%, you would have a total of from $10 to $6, that's a 40% profit, and you would have paid him $5, you would have just made $3.50 on that share that you had bought, or you would end up making 35%. So it's a great deal. There is a lot of risk involved with shorting, but as Rhett Van Leeuwen has kind of pointed out, there is a lot of upside potential as well to shorting. Sometimes it's easier to know if a company is going to do poor than if it is going to do well. But that is essentially what a short position is. Next thing we're going to talk about a little bit, I know my battery's getting low here, the next thing we're going to talk a little bit about is the herd or the mob, the crowd. In certain stocks in day trading, there are groups of people that will move in and push a stock up very quickly. We're not going to really be doing a lot of talk about that, because if you are day trading like me, you're probably going to be using you're going to be going with large cap companies. I don't do a whole lot of penny stock trading, at least at the moment, and so I'm not really going to get into kind of the mob or the herd or anything like that. But I'm trying to think what else I'm needing to talk about. That's going to be kind of the volume moving in. A short squeeze, that's kind of important. A short squeeze is what happens when a bunch of people, so there's a lot of people that are shorting a specific company. What happens then is if people start to buy a lot of those shares, that share price starts to go up, right? It was coming down. As more people continue to buy, right, the price will start to go up. Now, if the company starts going up too much, those people that are still shorting the company will need to start buying those shares back. What happens is a lot of people start to want to cover profits, and that share price will start to go up. Well, what happens in that case is a short squeeze, where because the company continues to go up, people that were shorting the company making money on the downside now have to start to buy back those shares, and it forces the price of that share to go up. Short squeezes happen sometimes, especially in low volume companies, and it can cause a massive pop. It can cause a great increase in the company. Honestly, I think that's kind of why Tesla did so well for me last week, where I was able to make that 15,000, is because of for that reason, essentially. So that's kind of what a short squeeze is. A stop loss essentially is where you can choose a price in your brokerage account to where if the stock does start to tank, it will automatically sell off. I don't recommend doing a limit buy. That's the same thing where if a stock hits a certain price, you will buy X amount of shares that you predetermine at that price. I don't like having stop losses. I don't like having short sells or limit buys or anything like that, because at the end of the day, I want to read the chart pattern and know when I'm exactly getting in and when I'm getting out. So I don't recommend those things either. The other things I was going to talk about were going to be an ETF, what a mutual fund is, what an IRA account is, what a Roth IRA is, a 401k, what a bond is, RSI indicator, and MACD. We're going to talk a little bit about the RSI indicator because the RSI is on there. And on an RSI indicator, it's going to be a chart that you can add in on your TD Ameritrade Thinkorswim app. On that chart and everything like that, anything around a 30 and below, I would say a company is overbought. And it will show on that little graph, usually in turquoise ink, that it's oversold. Meaning that it's a good buying opportunity because it most likely is going to have a rise. And anything above 70 is usually considered overbought. Too many people have bought in, the company's overvalued at that point. And it's probably not a good buy at that specific point. I use the RSI a ton. along with the technical analysis with support and resistance lines to determine if I'm going to go in on a trade, if I'm going to go in on a company. So RSI is very important if you want me to do a more in-depth video on that, as well as the MACD indicator. I'm not going to even go over that right now because I don't use MACD very often. But RSI, EMA, SMA, VWAP, as well as support and resistance lines are the most crucial things that I end up using while doing my trades. So that is all I want to cover for you guys today. I'm so glad you guys tuned in. I really try to get through this video as quick as possible. If you have any other questions, if you have questions about specific things or want a different video, leave the comments down in the comment section. Please hit that subscribe button as well. I'm so glad you're here with me. I'm so glad I'm getting to film more of these videos. And thanks so much for joining me. Talk to you guys later. Bye.